The stock market today saw a significant uptick in major indices like the Dow, S&P 500, and Nasdaq futures. This unexpected rise comes after news that President Trump extended the US-Iran ceasefire. But why does this matter for you as an investor? Let's break it down. First off, let's talk about what a ceasefire means in the context of global markets. Historically, periods of conflict between major players like the United States and Iran have led to economic instability. Investors often react to geopolitical tensions by pulling out their money from risky assets like stocks into safer havens such as gold or government bonds. However, when Trump extended the ceasefire, it was seen as a sign that potential hostilities might be avoided at least for now. This kind of news is like a breath of fresh air for investors who are weary of market disruptions caused by geopolitical risks. And just like that, we see a rush back into stocks. Let's look at each index separately to understand this better. The Dow Jones Industrial Average climbed higher today, signaling that blue-chip companies, which often rely heavily on international trade and global supply chains, are seeing reduced risk. When conflict is low, these big players can continue operations more smoothly without the threat of economic disruptions. The S&P 500, a broader gauge encompassing many sectors, also showed a rise. This tells us that not just the large, stable companies but mid-sized and smaller firms are benefiting from reduced geopolitical risk as well. Nasdaq futures saw an increase too, reflecting investor confidence in tech giants who often face uncertainty due to global supply chain issues when there's tension between countries like the US and Iran. So what does all this mean for you? It's important to understand that markets react quickly to news. However, as a beginner investor, it can be tempting to jump into buying stocks right after good news or selling during bad times. This reactive investing strategy often leads to making mistakes because you might buy high and sell low. Instead, focus on building a diversified portfolio that fits your risk tolerance and financial goals. Remember, the market is cyclical and there will always be ups and downs. It's not about timing the market but rather staying invested over the long term. In conclusion, today's news highlights how geopolitical events can affect stock markets, which in turn impacts all of us as investors. But it also reminds us that while reacting to market moves might seem like a good idea, sticking with a well-thought-out investment plan is usually your best bet. Don't forget to like and subscribe if you found this helpful. Leave any questions or comments below.